Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.
I'm joined by the U.S. Treasury Secretary Scott Bessent this morning. On the heels of this agreement the president announced last night. Last week, you joined me, John, and Lisa, and you said you were going to Japan for the World Expo. It wasn't really going to be focused on trade. You came back. The president had a 75-minute meeting as well last night with the trade negotiator. You were in the room, and he got this deal with you alongside him over the finish line, even though the reporting out of Washington that actually the discussions with Japan were quite difficult. What changed in the last 24 hours?
Look, Anne-Marie, we had some discussions about the overall U.S.-Japan relationship, which was one of the strongest in the world when I was in Tokyo and Osaka. And then we got back. There were elections on Sunday. LDP did slightly better than expected. They don't have a majority. Japanese government was ready to deal. And as only President Trump could do, he brought the Japanese trade delegation into the Oval and had a very fulsome negotiation with them. And I tell you, they're tough negotiators, but President Trump's tougher.
Well, there is a photo circulating on Twitter from Dan Scavino, and you actually see a Sharpie X out of some what looks like preliminary deals for even more concessions with Japan. I want to ask you about this 15% tariff rate. Is that the new floor now for trading partners when you're going into these negotiations?
Well, I think it's very important to know that, 15% for Japan for reciprocal tariffs for autos. That is a different kind of deal, but because the Japanese proposed a very innovative solution. We've been working with them for months, the trade team, myself, Ambassador Greer, Secretary Lutnick, and they came to us with the idea of a Japan-U.S. partnership where they are going to provide equity, credit guarantees, and funding for major projects in the U.S. So they got the 15% rate because they were willing to provide this innovative financing mechanism.
There's a lot of Japanese FDI into the United States already. Is this new capital?
Oh, no, this is all new capital. This is all new capital, and it is going to be targeted at the strategic industries the President Trump and this administration believe that we have to de-risk on. During COVID, we saw our vulnerabilities, whether it was in medicines, semiconductors. So we are going all in over the next few years to de-risk our supply chains. And this deal, thanks to President Trump, is going to be part of that.
When it comes to the 15% rate on autos, this means that Toyota is basically paying a cheaper rate than, say, GM if they have inputs from other countries. They're still at the 25% auto rate. Do you see the auto rate leveling out to something lower than 25%?
We'll have to see. And again, those are just GM components. There's also the USMCA, the portion of any autos assembled in the U.S. And then, of course, GM and especially Ford. I think Ford has the largest U.S. production. You build it in the U.S., there are no tariffs.
So when it comes to what's next, we know the EU negotiators are in town. This 15% rate feels like potentially a floor. Could anyone get below 15%? Is the European Union still trying for a 10% minimum baseline tariff?
Well, again, the 15% is a result of this very innovative package that the Japanese came with, and President Trump being able to push them to do even more. So,
has Brussels come up with anything innovative?
Not yet, but again, talks are going better than they had been. I think that we are making good progress with the EU, but as I've said before, Anne-Marie, the EU has a collective action problem. 27 countries. Great thing about dealing with the Japanese. I've been going to Japan since 1990. I think this weekend was my 52nd trip. And the Japanese government moves as one entity. They're highly organized across all levels of government.
So you say the talks are going better. We just have a story hitting the terminal this morning from our colleagues in Europe that the European Union is readying $100 billion euros if there is no deal in place. They will impose 30% tariffs on those 100 billion euros worth of goods. Do you think we're going to get to that place?
I think it's a negotiating tactic, and it's what I would do if I were in their place. But Anne-Marie, remember, we are the deficit nation. They're the surplus nation. So any kind of a escalation in trade problems will always hit them worse.
I want to also talk to you about what's going on with China. You're going to Stockholm Monday, Tuesday to meet with your Chinese counterparts. Are we going to continuously see the discussions revolve around rare earths and export controls, or are there going to be other items on the table?
I think we're in a very good place with China now, and we can start moving on to bigger discussions. As I've said many times, there is the potential for a big, beautiful rebalancing between the U.S. and China. President Trump is committed to bringing back precision manufacturing to the U.S., and as we become more of a manufacturing economy, China is highly imbalanced. They account for 30% of all the manufacturing output in the world. That's not sustainable. We believe they should become more of a consumption economy. If they are willing to go down that route, then we could actually do it together. And then there are lots of other things we can talk about, whether it's them buying sanctioned Russian or Iranian oil, a number of security things. And so
What about the purchasing agreement from Trump's first administration? He had a deal with China, the phase one purchasing agreement on agriculture.
Well, again, that's another way that we could bring this imbalanced relationship into balance. So we will be talking about purchasing agreements, especially ag. So, and to refresh everyone's memory, we had the purchase agreements. The Chinese lived up to the purchase agreements during President Trump's final year in office, and then the Biden administration didn't enforce those purchase agreements. So, we're going to let bygones be bygones. We're going to look forward, and I think we can come up with some very interesting purchasing agreements. As you know, President Trump is committed to the American farmers.
Well, looking forward, you told me, John and Lisa, last week, the market doesn't need to worry about August 12th. That's the deadline for this current détente between Washington and Beijing. What's the new deadline going to be?
Well, again, I think that we could roll it forward, maybe in a 90-day increment. And I think the good news here is that we are back on track with the Chinese negotiations. On April 2nd, President Trump told countries, here's your reciprocal rate, but that was the ceiling. If you do not escalate, if you don't escalate, this is the max. The Chinese chose to escalate, but now both sides have de-escalated, and I think we can get into a very good cadence of regular meetings with them. And look, we're the two largest economies in the world. We do not want to decouple with the Chinese. We just need to de-risk part of our supply chain.
Does regular incremental meetings include a meeting between President Trump and Xi Jinping this fall?
I do know that Party Chair Xi has invited President Trump to visit China. I don't know. I don't have dates on that. I don't know if the president's accepted. I know they have a fantastic relationship on a personal level, which I think forms the basis of everything between the U.S. and China.
Local reports in China were talking about the two meeting on the sidelines of the APEC summit in South Korea this fall. It's end of October, early November, or maybe President Trump going to China first. Could we see a meeting that soon? You think a meeting within this year can happen?
I'm not privy to the president's travel schedule beyond September, so We'll see.
And nothing before a meeting with Xi Jinping before September?
Nothing before Labor Day.
So in the last week, I do want to go through something that's going on with China. They've imposed exit bans on a Wells Fargo banker, a Commerce Department employee, and according to Microsoft, they hacked into their software. Will you address these actions at the talks in Stockholm?
We're going to address a whole host of things, and obviously things like that will be on the agenda with my Chinese counterpart.
You had said to me last week that the NVIDIA H20 chip was potentially a chip in negotiations, a mosaic, part of the deal. Do you think China's doing this for leverage at the trade table?
Absolutely not. Absolutely not. Because, again, the H20, while it is an advanced chip, is not one of the most advanced chips. I think if we were to think about the NVIDIA stack, the HP would be something fourth, fifth down the stack. And my understanding is that Huawei can produce something with similar efficacy.
But China's malicious behavior, even just in the past week, even targeting a Commerce Department employee, do you think they're doing this to have leverage with the United States?
Well, I can tell you in Stockholm, it's not going to give them any leverage with me. And it's a big, sprawling bureaucracy. And sometimes I think we may see the arrest may have been in a province. The central government may not be aware of it. So, I would highly doubt that something at that level that they have wanted to engage with the U.S. We are engaging with them, and I think both sides want to move forward in a productive way.
But you'll raise these issues?
Yes.
So now that the administration is getting trade deals across the finish line, Japan, Indonesia, Philippines, yesterday you said the European Union potentially in sight, do you think the Federal Reserve is going to have enough clarity by September to cut interest rates?
Again, I'm not really sure what the Federal Reserve is looking at, because thus far we have not seen, or we've seen very little, if any, price pressures from the tariffs. And if we were to see those, they wouldn't be inflationary, it'd be a one-time price adjustment. So I think that their analysis of tariffs is a bit off.
Well, Governor Waller made this exact case to us on surveillance on Friday, and it sounds like he might dissent at this meeting. He also said the president hasn't called him yet. He's one of these names that are circulating around. Could he replace Fed Chair Jay Powell? Is he a name you're looking at? Have you reached out to him?
I think there are a lot of strong candidates, including several who are on the main board and perhaps regional bank presidents.
So are there other names outside of Kevin Hassett, Kevin Warsh, Christopher Waller, and you yourself has been circulating?
There's a long list, and like I said, there's some great candidates.
And have you reached out to everyone on both those lists?
I'm not going to talk about the process, but we are getting the process underway. Obviously, it's going to be President Trump's decision, and we're not in a rush.
So, you're not in a rush, but the president continuously says he wants to get rid of the Fed Chair Jay Powell. Mohamed El-Erian yesterday said he should resign.
Well,
do you think Jay Powell should step down to protect the institution?
A couple of things. One, the president said he is not going to fire Chair Powell. I was somewhat surprised that Mohamed El-Erian came out and said that. And what I've come out and said is that I believe that it would do Chair Powell a favor, and he would be doing the institution a favor if he did an internal review, separate monetary policy from everything else. And this is something that Larry Summers and I agree on, is this mission creep from the Fed is endangering their independence of monetary policy. So all these other things that they're engaging in could threaten monetary policy. So it is a big, sprawling institution. The central budget for the board is up 4x since 2004, and every institution needs to examine themselves.
But you want the man that you guys don't think is doing a good job to run that review?
What's that?
But you want the man, Jay Powell, which you and the president don't think is doing a very good job, to run the review of the institution?
Well, I think that it could be a committee. It could be a group. They could invite outside experts in. The Bank of England, after the 2022 rate hike shock, went back and did a very good examination of what went wrong with monetary policy that brought in outside experts. So, I think an internal review would be a good start. And if the internal review didn't look like it was serious, then maybe they could be an external review.
Have you communicated this directly with Jay Powell? Do you guys continuously have your once a week breakfast, lunches, either at the Fed or the Treasury?
I gave a speech on Monday night on bank deregulation, bank regulation, the future of regulation, which is, aside from monetary policy, I think the most important thing for the economy. The Fed is one of three regulators. There's the Fed, the Office of Controller of the Currency, which sits under Treasury, and the FDIC. And I believe that all three of those should have important voices, and I believe that the regulation has been much too stringent since the great financial crisis. We are seeing this big buildup outside the regulated financial system. I think I saw something 2 days ago, the private credit is up 10x. I'm not saying it's a financial stability problem, but I am saying that there's a regulatory arbitrage going on. But that was a long way of saying I saw Chair Powell at that speech.
And your lunches and breakfasts continue?
Always.
So you have a good relationship with him at the moment?
We have continuing communication.
Last time you were on, you also talked about the potential next Fed chair. You said his or her nomination. Is Governor Bowman also in the running?
Again, I'm not going to name names, but they're good candidates. As I said, on the board, there's several female regional bank presidents, and then there are some fantastic women outside the Fed. There's
also Governor Kugler's chair that is open in January. Have you started that process?
It's a simultaneous process. The Kugler chair is a 14-year seat. So we'll be looking at that also. And again, I think we have some very good candidates.
Given you just saw Jay Powell, has he yet to tell you whether or not he is going to leave the board, his governor seat, before 2028?
He hasn't yet. My belief is that he will, and I think that it would be very good for the institution for him to do it, and I think it'd be very good for him personally to do it.
The president once said that he goes out and riles financial markets, and then he sends you, his Treasury Secretary, out to calm things. Things are pretty calm today. But when it comes to the Fed chair, I know you love college basketball, and you talk about the president being Bobby Knight, and I know you love Dean Smith. Are you guys playing this good cop, bad cop when it comes to talking about the Fed, talking about Jay Powell?
Not at all. Anne-Marie, the reason I think that I'm, to the extent I'm able to calm the markets, and that doesn't always happen. I was in the investment business for 35, 40 years, but I think more importantly than that, I understand what President Trump is doing. And a lot of times he's 1, 2, 3 steps ahead of the market. And as you know better than anyone, the market wants instant explanations. They want clarity. They want immediate gratification. So I think that I am able to, as a former practitioner, I think about when President Trump tells me what his goals are, I think about what is the best way for me to give good framing to market participants for them to understand what he's doing, because he always has a plan. It's not always obvious.
So you are communicating almost the strategic ambiguity that he likes to operate from.
Well, and I'm also trying to explain that there is a plan, because look, these letters went out. Everyone was oh my gosh, these are high rates. And I think the president created maximum negotiating leverage, and the market actually took it pretty well, took it pretty well.
Just to finish on that final point then, do you think he's more emboldened to go for higher rates with trading partners now, given the market is not pushing back?
Well, I think he's created a lot of leverage because he's created an A-B situation. He is able to go to the trading partners and say, look, I am happy to take in this tariff income if you don't want to negotiate. This is a high rate, but the U.S. is taking in massive amounts of tariff income. We had the first June budget surplus since 2015, last month. We reported it this month, and so we are taking in substantial income. So President Trump is creating this leverage by saying, if you don't want to negotiate with me, I've sent you a letter with a high rate. Have at the high rate, or come and negotiate in better fashion. Because I'll tell you, what was fascinating for me, and this was President Trump at his best, was the Indonesians came with what I thought was a very good offer out of the blocks. President Trump kept pushing them. He raised the reciprocal rate when he sent them the letter, and 5 iterations later, the Indonesian trade deal was greatly improved, turned into a great deal for both sides.
Secretary Scott Bessent, thank you so much for your time this morning.
Bill Ford, co-head of equity capital markets for Wells Fargo, expects activity to pick up in the second half of 2025. Jill joins us now for more. Jill, good morning.
Good morning.
Markets wide open. Is it healthy? Is the kind of activity that you're across right now what you would describe as healthy?
Well, I would say, IPO volumes have certainly been lackluster for the first 6 months of this year, particularly contrasted versus all the expectations post the election late last year. We are starting to see signs of life within the equity capital markets, and particularly with IPOs. They are pricing well. They're trading well. Buyers are making money. They're looking outwards now as we get more clarity with these tariff deals. They're looking for new ideas as opposed to hunkering down and trading what they know. And that's really, really healthy for the IPO market. So I'm optimistic. There are lots of IPOs coming. Many IPOs came in June. There are many more coming in July. And the fall is looking pretty good as well.
The typical lifespan of a company has obviously shifted. They're staying private for a whole lot longer. Can you describe to us as to why they're not going public? Are they push factors or pull factors? Are you just seeing people sucked into private markets and staying there because the options available to them are so good?
A lot of it is driven by the companies that own them, the private equity sponsors. They are very unemotional about when they sell things. They want to sell at full value. They want to realize the full value that they deserve for their assets. And when IPO markets have larger than normal IPO discounts, they're going to sit back and say, what are my other options? And there's lots of options for treading water. I can give you a whole list of ways that private equity firms have decided to keep their companies private longer. The flip side is when they do come out, they're more mature. They have acted almost like a private company for longer. The management teams have become accustomed to managing expenses, not growth for growth's sake. So you're getting a higher quality company that is coming out.
It also indicates that they see the market as frothy enough to handle some of the potential valuations that they would like to see for those exits that they might not be getting in previous markets. The market's been open a long time. It's just not at the price that they want. And I wonder if it tells you something about where we are in markets, that a lot of companies are starting to say, okay, if we're not going to pull the trigger now, I'm not sure when we can.
Two things are at play here. The first one is the IPO market as a cohort for 2025 is up close to 50%. Now, there's a couple of high flyers in there that are driving it higher, but versus the average 15% pop, that's really meaningful for people's portfolios. The second thing that's going on is that people are starting to realize the queue is getting so large, we couldn't cycle through it in a single year. The IPO backlog right now is about 200 companies or so that have filed confidentially. There's probably another 200 to 300 companies beyond that who are IPO worthy who have not yet gone through that process. So if you take an average IPO year of, call it 75 to 100 IPOs, you're looking at several years to try to clear this queue. Do you want to be in the front of the queue, or do you want to be in the back of the queue?
We keep hearing this, the idea of the backlog building and the idea that the pipeline is full. It's just a matter of when you're going to pull the trigger. And I wonder if the tariff levels that we've gotten overnight are enough certainty, especially when paired with the legislative certainty that we've seen in Washington, D.C., for a lot more companies to pull the trigger.
Well, I do think that IPOs love boring, right? They don't want volatility. They're out for 7 to 8 days of market exposure. And the great news is that for the last few months, we've started to see the market shrug off a lot of that news flow, right? And so with continued clarity on tariffs, A, we've got a calmer market, hopefully, but B, CEOs and CFOs are going to be able to forecast their business more accurately. If you can't forecast your business because of tariffs here, there, and everywhere in your supply chain, you're really going to struggle to give people comfort to come into a new name. So those two things are at play, and we're starting, hopefully, to be on the road to more clarity around that.
Jill, could we finish on the resilience of corporate America? This has been an ongoing theme now for the last several months. You talked about them being battle-hardened, battle-tested once they became public companies. Can you reflect on your experience of just how resilient corporate America actually is? The ability to borrow a phrase from our good friend TK, to adapt and to adjust?
No question. 2021, we obviously saw a lot of nonsense go on and a bit of a bubble, and then very, very little activity in the years following. I think companies have had to learn to be much more prudent, conservative, to manage not just growth, but to manage margins. If they're not profitable, to have a bridge towards near-term profitability. And overall, that's created a really healthy backdrop. You know, the other thing to focus in on is the health of the consumer, right? If your consumer's not healthy, it's now the right time to be going public. As the consumer also appears to be very resilient, we're seeing those corporations that have them as customers become even more resilient and healthy. And so we're optimistic through the second half of 2025 and certainly well into 2026 as it relates to IPO volumes.
Jill, this was great. It's good to catch up. Thanks for the update. Jill Ford there of Wells Fargo. Here's the view on Wall Street this morning. Jack Caffrey of JPMorgan writing, the rally suggests traders are expecting another positive quarter of earnings and sales upside against forecasts. Jack joins us now for more. Jack, good morning.
Good morning.
How low is the bar?
As you were talking right before you got to me, it's very almost stock specific. I mean, earlier this week we heard from, a semiconductor company that sells to the auto industry. They were down 6%. Last night we heard the update from Texas Instruments. Good numbers, weak guidance. They're down 9% this morning. Which doesn't feel like it's supposed to be shocking after what we'd heard earlier in the week. And at the same time, you're seeing names, but the average company's up 1% the day after their report. So on the whole, things are quite nice. But the fact is there are a lot of potholes and seeming landmines that people are still stepping on as we work our way through this. And I think at some point over the next month, we're going to be spending more of our time talking less about 2025 and the very modest expectations for 2025 and talking about how things accelerate so dramatically into 2026. That hope for we get policy certainty at some point or policy consistency.
Is that all you want? Just consistency?
I just want to know what the rules are.
And then we'll move on.
I think ultimately U.S. companies are exceptional at driving profitability once they understand what they're going to operate under. If we went back to the first Trump administration, a lot of focus on trying to get tax policy, and then you created a trade war within days later, and for the most part, companies sat on their hands in terms of thinking about their investment. Today, now we actually have some tax clarity. That's the good news. Ideally, we'll get some trade clarity that might lead to actually understanding where investments go. But at the same time, I think I and other investors thought that perhaps when you looked at where prior budgets were allocating capital in terms of trying to think about subsidies and goals, a lot of that's now been thrown up as you've ripped up parts of the goal of electrification, say, in the One Big Beautiful Bill. So I don't know if the battery complex of Georgia makes as much sense, if the EV manufacturing in Tennessee makes quite as much sense on a go-forward basis, if the cost structure underwriting those investments is as durable as we initially thought.
On a broad market basis, have we priced in the certainty before we've gotten it?
It kind of feels like it when you think about, implied volatility effectively at year lows. If you look at put buying, that's running at sort of year lows. If you average it, not any one day's number, but smooth that out. If you look at corporate credit spreads, again, at 52-week lows. So for the most part, I think risk markets are saying, we got this. And I think that's where things get trickier, especially as we go into the next month or so, when liquidity does tend to be a little bit punkier overall, and people try to go on vacation.
Right. Well, this is sort of the buy the rumor and sell the news, and a question about whether you agree with Julian Emanuel over at Evercore ISI when he came out earlier and he said he sees the next move in equities to be something like 7 to 13% lower. Do you agree with that?
Having not read the note, I'm not sure what he was looking to. I think
on a theoretical basis, do you agree with the lower?
I think now next, call it 60 days, I think it's going to be hard to get a big rally unless you get something truly dramatic in the way of blowout sorts of news. I think underpinning that, though, we're looking for a mid-teens growth in earnings coming out of the Mag 7. I think the trick is that the forlorn 493, we're supposed to have earnings growth of like 3 or 4% for the course of this year. That accelerates to 12% next year. So actually the momentum in earnings is shifting away from the Mag 7 into the forlorn. And I think that speaks to a stable, growing economy. And ultimately, I think maybe we spend too much time talking about the economy does this. Look at the consumer. The consumer continues to work. The consumer continues to spend. And I think that's really the flywheel that people really need to pay the most attention to, because it's that stable consumer spending that's driving the earnings and cash flow that underpins the transition to AI. When you think about who the capital spenders are versus who the capital providers are, it's the consumer keeping working and spending every dollar they get.
I'll buy Lisa. That 7% call of Julian, 7 to 15, whatever it was.
15, yeah.
There's a common theme, I think, for a lot of the analysts who are making this call at the moment, is that they want to buy it. So they'll say, I expect the equity market to have a drawdown of maybe 10%, but ultimately I want to buy the dip. Heard the same thing from Mike Wilson of Morgan Stanley, exactly the same. So the same thing from Goldman Sachs. They said, we anticipate a less favorable growth inflation mix in the second half, challenging the Goldilocks scenario. Still neutral, and still moderately positive on stocks over a 12-month time horizon. I see that on repeat across Wall Street.
Yeah, how pessimistic can you get when ultimately you're talking about a drawdown? That's going to be a great opportunity. Please sell off so that we can buy it. It raises this question.
Let's remember also that we also have a Fed that's planning to cut. The debate might be, do they cut in July or are they cutting in September? But the Fed is trying to be our friend. They are actually moving in a direction that tends to be risk supportive. And so, having started as a strategist and having to live by trying to get the timing right, I appreciate being a portfolio manager and getting to step a little bit away from the noise and be like, what's the main thing? And let's focus on the main thing. The direction remains, a growing economy, growing earnings, and cash getting returned. Less cash probably gets returned to us as investors going forward when you think about the massive investment demands that we're starting to try to underwrite. And I think that's going to make things, perhaps a bit trickier, and where you have to deliver versus it would be nice if you delivered.
And a bias to reduce interest rates, as you say. Jack, appreciate your time. Jack Caffrey of JPMorgan.
I'm with another negotiator that was at that table with the president last night, Commerce Secretary Howard Lutnick. I want to pick up on this idea, and good morning. Thanks for joining us. I want to pick up this idea of innovative financing mechanisms and this $550 billion fund the Japanese are going to be investing into. What exactly is that fund going to look like?
So the Japanese are going to give America the ability to choose the projects, decide the projects, and execute the projects. So let's say we want to build generic pharmaceuticals, right? We don't make antibiotics in America. So the president says, let's go make antibiotics in America. The Japanese will finance the project. They will finance the project, and then we'll give it to an operator who'll run it, and the profits will be split 90% to the taxpayers of the United States of America and 10% to the Japanese. So they basically bought down their tariff rate by this commitment of, we will back what you, the president, want, and you, America, want to build in America that are key to national security concerns. We'll back that, and therefore we'll be on your side.
The Prime Minister, Ishiba, says these are loan guarantees. Is it more than that?
Of course it's more than that. It's equity, loans, and loan guarantees. They have to deliver the project. So we say, let's build semiconductors. We want to build $100 billion worth of semiconductor fabs, is what you call them, because we want to make those chips in America. The Japanese will finance that whole project. They've got to put down equity, loans, whatever they want to do. They have to deliver the $100 billion.
Or Japanese companies?
No. Anybody does it. It's the Japanese are the financier. They're the banker. They're not the operator. It's not Japanese companies. So when people get confused, this isn't like a Japanese company like Toyota coming in and building a factory. No, that's Toyota. This is literally America saying we want to build generic pharmaceuticals, semiconductors, critical minerals here.
Does anything like this exist now? Like, what could we think of and model after
That's why you have someone like me who joins the government. I mean, this was my idea in January. So I started, because the Japanese are never going to really open their market the way Donald Trump wants them to open it. I mean, open it. So what happens is they had to come up with another way to really make it work and the tariff model work. So I suggested to them a $400 billion fund where they would give to the president and they would give to America the financing to go build out your whatever you think for national security, go build it, we'll back you, and that's the model.
The reports the Prime Minister, though, may be resigning. Could this deal transcend domestic politics in Japan?
Of course. I mean, it's vital. You saw what happened to their car companies. They were all up more than 10% today. So a 25% tariff delivers what Donald Trump said. Build it in America. A 15% is right on the edge. It's right on the edge, so the Japanese car manufacturers can still produce in Japan, and that's what the Japanese wanted to buy. They wanted to buy that line where they could stay in Japan for some cars, build, of course, huge amounts here, but also what they did is they'll invest and give Donald Trump the tools to invest in America.
That 15% tariff on autos is huge for Japan. Do you see the entire auto tariff, that sectoral tariff, coming down from 25% to 15%? Because for some inputs, this would mean Toyota has a 15% rate, but GM still has a 25% rate.
Well, GM doesn't have a 25% rate unless they build somewhere.
And they import from South Korea or a product from Japan?
If you build in South Korea, you have a South Korea thing. And if you're importing from South Korea, that's a South Korea thing. So Europe is now paying 25%. South Korea is paying 25%. The Japanese have bought, if you will, by giving a huge investment to Donald Trump in America. They bought the ability to be down to 15%, and Donald Trump can then really invest in America on the projects that he thinks are the most important for America. And we'll see what happens with Europe. We'll see what happens with South Korea. But right now, Donald Trump has put the pressure on them. Let's be clear.
Well, is this
He's
a model?
put the pressure on them.
Is this a model for Brussels?
It could be. I mean, that's up to them to negotiate, right? Are they willing to open their market? I don't think anybody, Europe's not going to go and give us $1 trillion to invest in America.
Well, can they get below 15%, or is 15% now the floor?
For autos, I would.
No, for a reciprocal tariff for the European Union.
I don't think
at one point they were willing to accept.
I don't think
10%.
big countries can get low like that. I think small countries have a possibility of being low, and that's up to the president to decide. But larger countries will have a hard time with that. They will have a hard time.
So to be clear, with the European Union right now, and the trade negotiations are in Washington, I know you're talking to them every single day, the rate, the floor that they would have to accept is 15%, what Japan accepted.
I think what everybody in the world has seen is Donald Trump. So I'm the table setter, if you will, right? I set the table, right? I organize things, I structure things. There was a picture that the president posted over his shoulder with the big board that, of course, I created the big board and put it there. But the answer is the negotiator-in-chief of the United States of America is sitting behind the desk. Right. Donald Trump is sitting there negotiating the deal.
You also created the board on Liberation Day, and we saw the sky-high tariffs. You created last night's board. I'm trying to understand from you what the European board is going to look like. So if, say it's a 15% across the board rate, what can the Europeans be buying that can assuage the concerns of the president? Are you talking about LNG purchases? Is there agricultural purchases?
The Europeans have a $20 trillion economy, right? We have just under 30 trillion, and the Chinese and the Europeans are similar in size at about $20 trillion. So if they say to the president, we will open our market to you, and I mean really open it, meaning we will take U.S. cars, think of what the Japanese did. They said, we will take U.S. cars based on U.S. standards. So you don't have to make a different car. You can take the car you make in Detroit, put it on a boat, and send it. If the Europeans will accept that, and they will accept really accepting U.S. products in Europe, that's a giant. That's hundreds of billions of dollars of export opportunity for Americans. That's going to move the president because he's going to say that opportunity for Americans is so great.
Do you think you get there next week?
Well, we've been talking about it for months. I mean, holy moly, I can't count.
They're saying they're going to retaliate if they don't get a deal by August 1st.
I understand. And the president wrote them a letter saying, if you don't get a deal done, we're charging you 30%.
This is all negotiating tactics out in public.
Well, of course it is. I mean, Donald Trump writes a letter and says, if you don't make a deal, it's 30%. And the thing about Donald Trump is he's dead serious. If you don't make a deal, it's 30%. Now, that puts the pressure on them, right, to say, okay, that's my alternative. They want to get a deal done. For sure they want to get a deal done. But does Donald Trump want to get a deal done? How much does he value the fact that they open their market? Do they completely open their market? Because that's what he's looking for. I think they will. I think they will really open their market. And I mean open it, which is something the United States of America has never had. The idea that Donald Trump is opening the world's markets for Americans, the ranchers, the fishermen, right, our farmers. I mean, these are amazing opportunities that no one in the world has ever seen. We have Stockholm Syndrome, right? The world has so held us off for so long. We can't even imagine a world where we can export freely the way everybody else exports to us. And that world is coming. That's what Donald Trump calls the golden age. That's what he calls it. Our ability to export to the world the way they treat us, we can now finally treat them.
You're going to have to step away from the Europeans, though, potentially for a moment next week, because I believe you're going to be headed to the Stockholm talks with China.
Yes.
So what we saw with China in this administration, Jensen Huang had a conversation with the president. I imagine you were there when it comes to NVIDIA H20 chips. What did Jensen Huang say to you and the president that gave him the green light to start selling those H20s back into China?
Well, the H20s were open during Biden. So Biden said really
they were developed during Biden because
but they were sold to China.
Compliant.
They were actually sold to China. And then we came in and we said, whoa, that's a pretty powerful chip.
In April.
And we held that back. And that was then held back. And now we had the whole magnet thing, which is very exciting. We're trying to make sure that magnets are being delivered to our producers, which was the deal. And these have export controls on them. And they'll come off as the Chinese deliver their magnets, then the H20s will come off. But it is logical, since they were free to sell last time, it seems reasonable that we'll get to that point.
But you said they were a powerful chip. Are you concerned about national security issues when it comes to allowing the Chinese now to get their hands on the H20?
Well, the H20 was the third best chip in the world, and now it's the fourth best, right? Because the Blackwell is the best. There's an H200 and H100, so an H20 is the fourth best chip. And I think the president has decided that if things are going well with China, that they can buy them. So I think that decision's been made. We are putting on the licensing mechanism, and we are getting that going. But the president has decided that the Chinese can buy them, but that's in a balanced way with the Chinese delivering on the deal that we made with them, and they're delivering rare earths to American manufacturers.
So when you sit across from your Chinese counterparts next week, what do you plan to discuss with them? Is loosening export controls, more export controls on the table?
I think what we talk about is there's a line, right? Below the line, we are giant economies. We should trade with each other, right? They want to buy our produce. They want to buy our vegetables, right? They don't grow everything. They don't have the breadbasket of America that we have. So they want to buy those products. And you know what? There's lots of things that they make that we want to buy, that we want inexpensive things on our shelves. So let's talk below the line. Let's open the market better in China and let us sell more things in China. And then at the line where we're competitive, where is that line where above that line, they're not going to sell us their hypersonic missiles, and we're not selling them our best chips. Those two things are not happening because they're a competitor. They are a competitor. And what we're really going to discuss is where's that line? Are the H-20s above the line or below the line? That's really nuance, and that's discussion. But of course, would we like to buy baby clothes that are inexpensive? Of course we would. That makes perfect sense. So let's open the market down here, right? We're never opening the market up here. And what do we discuss? We discuss that line of what's over it and what's under it. But do we want more of this? Them selling it to us and us selling it to them? The president and President Xi from China agreed that they would like to do more business there. So we're going to talk about opening their market more for things that make sense to open it. And we're really going to discuss the areas that maybe we should really be addressing. Is that yes or is that no?
One area, I just want to finish on this. I'm curious if you're going to address directly, because it's the Commerce Department. An employee of yours is facing an exit ban right now from China. Do you have any update on this?
It's unbelievable, right? So he has, there was an employee of ours, he's a Chinese national who was working in the patent office, and he went home and he was arrested, and they're holding his passport. I mean, so I give that to the State Department, and the State Department deals with that. But it is outrageous behavior. It's just outrageous behavior.
Secretary Lutnick, thank you so much for your time this morning.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.